Hello friends, now let us start our new chapter where the focus is on your levy of customs duty. When customs duty is being levied, so the focus is on levy of customs duty. Friends, the base charging section of your customs is section 12. But we are not going to discuss only section 12 in this chapter. We are going to discuss even other sections apart from this base charging section in this chapter. Right. Now when you see this chapter, again this chapter we have divided into 3 subtopics. The first subtopic will be talking about your base charging section, that is section 12 of your Customs Act 1962. The second subtopic we are going to talk about special charging section. Friends, understand that there is nothing called a special charging section. We are understanding this as special charging section, where the focus will be on section 20 and section 21, and you are talking about exception to charging section. Exception to charging section, where we will be discussing about section 13, section 22, section 23 subsection 1, section 23 subsection 2 and your section 24. What is the base charging section? Normal charging section, we are going to talk about your normal charging section, section 12, where you talk about levy of import duty and levy of export duty. The base charging section, there is only one charging section in customs, friends, that is section 12, levy of import duty and levy of export duty. Now, the second subtopic of this chapter, we are going to discuss about special charging section. Now, the special charging section, we have given the heading as special charging section, but I will repeat, friends, there is nothing called as special charging section strictly in customs. Why we have kept the name as special charging section? Once we discuss that, you will understand. Right? Special charging section is section 20 and section 21. Section 20 talks about re-importation of goods. So at the time of re-importation of goods also customs duty is levied, it is clarified there. The clarifications there, when you talk about special charging section, friends, they talk about clarification. Clarification that your import duty will be there even at the time of re-importation. Even at the time of re-importation of goods. And another clarification is there when you talk about importation of goods by way of sea, where you talk about your derelict, wrecked, jetsam, flotsam. Derelict, wrecked, jetsam and flotsam. Friends, what you can understand here, in normal charging section, the focus is both on your import as well as your export. The focus is both on your import duty as well as export duty. Export duty is rare, but it is there. Export duty is rare, but it is there. Whereas special charging section, section 20 and section 21, if you look at the language, you will find that the focus is only and only on import duty. The focus is only and only on your import duty. Right. Section 20 talks about re-importation of goods. The goods are re-imported. Clarification that import duty will be there even at the time of re-importation of goods. Section 21, friends, talks about importation of goods by sea, special importation. That too by only sea, and that too it is only by sea, where you talk about your derelict, wrecked, jetsam and flotsam. These are the terms that you have to understand. We will discuss when we are discussing section 21. Derelict, wrecked, jetsam or flotsam. And when you talk about exception to charging section, again friends, when you talk about exception to charging section, the prima facie focus is only of import duty. Import duty. The focus is only on import duty. Section 13 talks about something called as pilferage, petty loss, small loss. Section 22 talks about abatement of import duty in case of damage or deterioration of goods. In case of damage or deterioration of goods, lesser import duty. Section 23 subsection 1 talks about remission in case of total loss or destruction. In case of total loss or destruction, either you are talking about total loss or destruction. Right. Section 23 subsection 2 talks about relinquishment of title, giving up your title. Giving up your title. You are giving up your title. You tell that I don't want the goods. I don't want the goods. Relinquishment of title. Section 24 talks about denaturing or mutilation. Changing the nature or mutilation of goods. Denaturing or mutilation. Friends, in all these cases, either there is no import duty or lesser import duty. Either there is no import duty. Either you will come to a conclusion that either there is no import duty. You are not required to pay import duty, or you are going to pay lesser import duty. You are going to pay lesser import duty. Therefore the heading exception to charging section. And when you talk about special charging section, it is a clarification. There is a clarification that you have to pay import duty even at the time of reimportation of goods, or even if it is a case of direct jet SAM or float SAM. And there are certain exemptions also. There are certain exemptions also. So you have certain exemptions as well, right? So friends, you have to understand all the three subtopics have got different objectives. Normal charging section, section 12, talks both about your import as well as export, import duty as well as export duty. Export duty is very rare, but friends, it is there. Export duty is very rare, but it is there in certain cases. Special charging section, section 20, section 21 talks only about your importation, that is import duty. Section 20, reimportation of goods. You are importing the goods again. Section 21, importation of special goods by way of sea, that is it. Your direct jet SAM and float SAM. We will understand the terms when we are discussing section 21. Now, exception to charging section, either there is no import duty or there is lesser import duty. Again, it focuses only on import duty. It focuses only on import duty. Your special charging section, section 20, section 21, exception to charging section, section 13, section 22, section 23, 20 and section 24 focuses only on import duty. Section 13 talks about pilferage loss, petty loss. 22 talks about damage, deterioration, abatement of import duty, lesser import duty. Section 23, 1 talks about your total loss or destruction, remission. You need not pay import duty, remission, begging the department not to pay import duty. Section 23, 2 talks about relinquishment of title, giving up of title. You tell that I don't want the goods, I am giving up the title to you. So you are giving up the title of the goods to customs department, relinquishment of title, no import duty. And section 24, denaturing or mutilation, denaturing of goods or mutilation of goods, changing the nature of goods or mutilating the goods. We will try to understand all these sections when we are discussing the third subtopic. Friends, the first subtopic of this chapter is normal charging section, where the entire focus will be only on section 12. So the first subtopic is your normal charging section, section 12, where the focus will be both on your import duty as well as your export duty. Friends, always your bird's eye view will tell you very clearly what is the discussion of this chapter. So bird's eye view, we know all the sections that you are going to discuss and how we have bifurcated the discussion into three parts: normal charging section, special charging section and exception to charging section. And friends, now the focus is only on normal charging section, section 12, where we are going to focus both on your import duty as well as export duty. Levy. Right, friends, when you talk about charging section, you have to understand that you are talking about your levy. You are talking about your levy. Even when we have discussed your GST, first we discuss about your levy. In GST, levy was after satisfying 6 P's: product, process, place, price, percentage and person. But in customs, levy is satisfied only the moment you clear 3 P's. For levy, there are only 3 P's that are required, that is product, process and place. Product, process and place. And levy is followed by assessment. You do the calculation, which is followed by collection. Levy is followed by assessment, and only if there is levy you will do assessment, and only after assessment there will be collection. Only if there is levy you are going to do assessment, and only after assessment collection of duty will be there. Collection of duty will be there by the government. Right. So understand that levy is the triggering point. Right. Levy is the point where your liability is ascertained, whether levy is there or not, and only if levy is there the duty will be charged. Only after levy is there your duty will be charged, which is followed by assessment and collection. What is assessment? Assessment is nothing but the procedure to quantify value, and finding the value and finding the rate is nothing but your assessment. And after you assess, this is the amount that you have to pay the amount. Final stage is collection. And if you don't pay the amount, government or department will forcefully collect the amount. And collection of tax may be deferred, that is postponed for administrative convenience. Levy may be there at one point earlier time, and collection may be deferred. Deferred means the collection may be postponed at a later point of time for administrative convenience. Levy followed by assessment and collection. Rather, strictly speaking, you have to go in this way. It is first levy, which is followed by assessment and collection. Assessment and collection both are integrated. So levy is followed by levy is followed by your assessment and collection. Only if there is levy, only and only if there is levy, right? Only if there is levy, there will be assessment and collection. There may be cases where there is levy, but there is no assessment and collection. There is no collection because you are talking about say exempt goods. Import duty is exempted, right? And friends, first scenario, if there is levy, there will be assessment and collection. Second, there is levy but there is no assessment and collection because you are talking about exempted goods. Third scenario, if at all there is no levy, obviously there will be no collection. If there is no levy, there is no collection. So this you have to understand. The triggering point is always levy. Triggering point is always levy. Levy, if levy is there may be collection. If levy is there may not be collection because you are talking about exempt goods. Rate of duty being 0%. And friends, if I tell that there is no levy, there is no collection for sure. There is no levy, there is no collection for sure. So this actually we have discussed even in your GST. Friends, you have to understand that levy is a triggering point, charging section. Levy is a triggering point where you are talking about your charge. You are taking charge. There is a charging section. So when you talk about charging section, it focuses only and only on levy. The focus is only and only on levy. Assessment and collection, you are talking about assessment, you are talking about your valuation chapter and classification chapter, your value and rate, your valuation and classification chapter. Collection, you are talking about lot of procedures. Collection, you are talking about lot of procedures. Friends, if I were to tell this in terms of your chapter, in levy, the levy chapter that we are discussing is focusing on your charging section. So here you are talking about levy of customs. Basically we are focusing on your charging section, section 12. Special charging section, section 20, 21, and exception to charging section, section 13, section 22, 23, 24. IC has given them in separate part, but we have taken them under charging section as exception to charging section where we will be paying lesser import duty or no import duty. But they are actually, strictly speaking, they have got nothing to do with your charging section. And after your levy is there, you are going to talk about assessment. Friends, when you are talking about your assessment, friends, when you are talking about your levy, the focus is on charging section. And friends, when you are talking about your assessment, the focus is on valuation as well as classification. Valuation is finding out the value, classification is finding out the rate. And friends, when you are talking about collection, you are talking about all your documentation procedures. You have a lot of procedures: import procedure, export procedure, transit, transshipment procedure, warehousing procedure. Warehousing procedure is not applicable for your exams, but you have that in law, but not applicable for your exams. Baggage procedure, etc., etc. Right, so you are talking about your procedures. Now friends, for levy to be there, section 12 to be there, right, for import or export, there are only three conditions. That is your product, goods, your process, import or export, and your place, India, which you have discussed in the previous chapter where we discussed about basic concepts of your customs. The first focus was on product, process, and place. So if the product is goods, processes import into India, or processes export from India, so that is even covering your place. So product, process, place. If all these things are satisfied, friends, your levy is there. And friends, when you're talking about levy, after levy you are going to do assessment and collection. So the first part is all about your levy, where you're talking about your product, process, and place. That is goods is product, processes, import or export, places, import into India or export from India. And friends, when you talk about your assessment and collection, you're talking about your value and rate. So basically your focus is on your assessment. Assessment requires quantification. You're talking about your assessable value and rate of duty. Customs duty is equal to assessable value multiplied by rate of duty. So focus is more on your assessment. Rather than collection. Focus is more on your assessment. The first part is all about your levy. The second part is all about your assessment. Your assessable value multiplied by rate of duty. Alright. Friends, when you talk about your assessable value, we will be discussing much about it in your valuation chapter, but at least the basic understanding. The normal valuation is transaction value, section 14, subsection 1. Assessable value normally is covered by your transaction value, section 14, subsection 1. And certain notified goods are valued on the basis of tariff valuation by CBIC. So, very special cases, notified cases, they are valued under section 14, subsection 2, where you are talking about tariff value. Tariff value is very rare. Only for notified goods, the valuation will be under section 14, subsection 2. So, normally your valuation is under section 14, subsection 1, where you are going to focus on transaction value just like your GST. Section 14, subsection 2 is for notified goods by central government, where tariff value by CBIC will be there. Tariff value by CBIC will be there. Now, friends, section 14, subsection 2 is only for notified goods. So, what is the general valuation provision? The general valuation provision is section 14, subsection 1, where we are going to focus on transaction value. And special valuation provision, section 14, subsection 2 is applicable only for notified goods, which is very limited in numbers, where the focus is on your tariff value given by your CBIC. The focus is on tariff value given by your CBIC. And friends, we are going to discuss in your valuation chapter. If at all you are going to focus on your transaction value, your valuation rules and exchange rate is always required. And if at all you are going to focus on your tariff value given by CBIC, you don't require your valuation rules, you don't require your exchange rate. They are never required. We will understand that in your valuation chapter. As of now, understand that valuation in customs has got two branches. Valuation in customs has got two branches. In customs, they have got two branches. What are the two branches? Normal valuation branch, section 14, subsection 1, transaction value, where valuation rules and exchange rate will always be required. Special branch is section 14, subsection 2 for notified goods by central government, but tariff value will be given by CBIC. The tariff value for them will be given by CBIC, where you don't require valuation rules and exchange rate. We'll be discussing much about that in your valuation chapter. So, in the introduction of valuation chapter, we'll be spending a lot of time to understand this. Now, friends, when you talk about your rate of duty for your import is given under your Schedule 1 of Customs Tariff Act 1975. And rate of duty for export duty is very rare, but it is there. Export duty is on very few items, but it is there. It is given under Schedule 2 of your Customs Tariff Act 1975. It is given in your Schedule 2 of your Customs Tariff Act 1975. Friends, if I were to calculate customs duty, assessment, customs duty will be equal to assessable value multiplied by rate of duty. So, customs duty will be equal to your assessable value multiplied by rate of duty. And friends, as discussed, your valuation normally valuation is under section 14, subsection 1. Only in special cases it is under section 14, subsection 2. So, normally the focus is on transaction value, which was even there in your GST. Specially, the focus will be on tariff value, which is only on notified goods, and this tariff value will be given by CBIC. So, very specially. And friends, when you talk about your rate of duty, again, when you talk about your rate of duty, first you have to be very clear whether you are talking about your import duty or you are talking about your export duty. If at all you are talking about your import duty rates are given in your Schedule 1 of your Customs Tariff Act, and export duty are given in your Schedule 2 of Customs Tariff Act. Export duty is very rare, but it is there. Export duty is very rare, but it is there. And friends, there is something very special or peculiar about your import duty. When you talk about your import duty, you have two types of rates under import duty. One is called as the standard rate and one is called as the preferential rate. One is called as the standard rate, one is called as the preferential rate. Say for example, against one item, say item X, you will have standard rate which is 20%, preferential rate which is 15%. Against item Y, you will have standard rate, say for example 10%, preferential rate, say for example, you are talking about say 7%, 7.5%. And say item Z, you will have only standard rate 10%, there will be nothing given against preferential rate. It means that there is no preferential rate, always that is only standard rate. One thing that you will understand, that standard rate is always greater than or equal to preferential rate. For item X, the standard rate is 20 but the preferential rate is 15. For item Y, the standard rate is 10% and the preferential rate is 7.5%. For item Z, there is no preferential rate. There is only 10%. There is no preferential rate. So it is highly possible for an item there is no preferential rate. Friends, when do you apply standard rate? Standard rate is applied for most favored nations. Now friends, who are most favored nations? When you talk about your member nations of World Trade Organizations or countries with which India has got bilateral agreements, friendly nations, you apply standard rate. Say for example, USA. And you have something called as other nations or other countries. For other nations, say for example, like say Pakistan. Initially, India gave MFN status, most favored nation status to Pakistan, and which of late was taken back, right? Which of late was taken away, right? Somewhere in 2018, India took away the status of MFN to Pakistan, right? So when you talk about most favored nation, if the import is from most favored nation, if you are importing from USA, if you are importing item X from USA, you are going to have rate as 20%. If you are importing item Y from USA, the rate will be 10%. If you are importing item Z from USA, most favored nation, the rate will be 10%. So item X, Y, Z imported from USA will have 20%, rather beg your pardon, we have written it reversely. Preferential rate will be that to most favored nation. Lesser rate, preferential rate is a friendly rate. Preferential rate means a friendly rate. So friends, when you are talking about your preferential rates, lesser rate, it will be given to most favored nations. Most favored nations means, as discussed, it is nothing but member nations of your World Trade Organization or countries with which India has got bilateral agreement, for example, your USA, right? And if the import is from other nations, if the import is not from most favored nations, if the import is from other nations, say for example Pakistan, right, which is not categorized as most favored nation, then you are going to apply your standard rate. Now if you are importing from USA item X, you are going to pay 15% import duty. If you are importing from USA item Y, you are going to pay 7.5% import duty. If you are importing from USA item Z, you are going to pay same 10%. If there is no preferential rate, you are going to pay same 10% import duty. So if the item are imported, if item X, Y, Z are imported from USA, you are going to pay what rates on item X? 15%, 7.5% and 10% if the import is from USA of item X, Y and Z respectively. Now friends, if at all the same item X, Y, Z are imported from Pakistan, which are not most favored nations, you are going to have a standard rate. If you are importing from most favored nation, that is member nations of World Trade Organizations where you give MFN status or countries with which India has got bilateral agreements, then you will have preferential rates, which is lesser rate generally. If you are importing from other than most favored nations, say for example Pakistan, you will have standard rates. So if you are importing item X from Pakistan, 20%. If you are importing item Y from Pakistan, 10%. If you are importing item Z from Pakistan, 10%. So if at all you are importing these three items from Pakistan, you will have 20%, 10% and 10% respectively for item X, Y and Z. Now I believe with this example you understand why import duty has got two rates. Schedule 1, your Schedule 1 of Customs Tariff Act 1975 will have import duty rates of two types. One standard rate, one preferential rate. Standard rate is a higher rate which is applied for other than most favored nations, other nations, for example Pakistan, where you will have higher rate. If the import is from Pakistan, then item X will attract 20%, item Y will attract 10%, item Z will attract 10%. And if you are importing from most favored nation, you will have preferential rate, right? Item X import from USA 15%, item Y import from USA 7.5%, item Z import from USA, item Z has got same rate, whether it is from Pakistan or USA, because it has got no preferential rate, it is 10%. It is 10%. So you have to understand this concept of your import duty, right? Standard rate is always a higher rate. Right? Higher, more than or equal to preferential rate which is applied for other nations. And preferential rate of import duty is always a lesser rate which is applied for imports from most favored nations, So that concept you have to understand. This is very peculiar only in import. Do you have the concept of standard rate and preferential rate for export duty? No. Export duty is actually very, very rare, and therefore whenever export duty is there, it is same. You don't have the concept of standard rate and preferential rate for export duty. First of all, having export duty is itself very rare. Export duty is very, 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 very rare, but it is there, given in Schedule 2 of your Customs Tariff Act. Right, friends, we have discussed the concept of preferential rate and your standard rate. So first point we have already covered. Now second point you have to cover. Right, even government, if it is importing some goods, even government is liable to pay import duty. So second point, there is an explanation, there is a provision in section 12 which tells that even government is liable to pay import duty. So section 12 subsection 1 capital A tells that even government is liable to pay import duty. Right, so levy of import duty is there even on government. You have levy of import duty even on your government. However, when the government is Indian Navy or your police department, that is state government or Ministry of Defence or Coastal Guard, there are exemptions, full exemptions are there, right, by virtue of exemption notification subject to conditions and procedure. Friends, what are we trying to understand? Levy is there even if import is by government. Even if import of goods is by government, levy is there. So whether the import of goods is by private undertaking or by government, whether your import of goods is by government undertaking, that is government, or your private undertaking, they are very, very clear with this point. Levy is there even if government is importing goods. The only special point is, for government undertakings there are a lot of special exemption notifications. When you talk about government undertakings, there are a lot of special exemption notifications, and these exemption notifications are there when import is by, say, Ministry of Defence, or say Coastal Guard, or Indian Navy, or say for example Air Force, or say for recent example Rafale. Right, so when you talk about Rafale airplanes imported by India, so you will find special exemption notifications for government. Levies are present, but in many places there won't be collection. Not in all the cases. In many cases there won't be collection. If at all, they are covered by special exemption notification. Friends, when they will be giving these special exemption notifications? Only if they find that these departments, that is Ministry of Defence or Coastal Guard or Indian Navy or your police department, are importing certain items only for self-use. So normally these special exemption notifications will be there only if the items that government is using is for self-use. Normal point. It's not given here in your text, but normal point when special exemption notification will be there, where government is importing some item, where levy is clearly there. but there is no collection. When there is self-usage, so when your police department of state governments or your Ministry of Defence or your Indian Navy or Coastal Guard, etc., or your ISRO, right, you're talking about space organizations, whenever these items are imported by government undertaking, and if you find that they are for self-use, they are not for resale, they are only for self-usage by police department or Ministry of Defence or Indian Navy or Coastal Guard, etc., then you will find special exemption notification. There will be no collection of import duty. Levy is there, but there will be no collection, obviously subject to satisfaction of certain conditions and following certain procedures. So for government undertaking, there will be special exemption notification. Now forget about exemptions. What point they were trying to tell us, even if import is by government undertakings or private undertakings, levy is there. Whether the levy is by private undertaking or whether the import is by private undertaking or whether the import is by government, levy is present. Whether the import of goods is by private undertaking or by government, they are very clear. Levy is clearly there. Levy of import duty is very clearly there. Friends, it is very similar to your GST. Even when you talk about GST levy is there on government also. So your customs duty levy as well as GST levy is even on government. So friends, that you have to understand it very clearly. So this is a common point when you talk about your GST and customs. Levy of GST as well as levy of customs is there even on government. Levy of GST as well as levy of customs is there even on government. They are not even escaping levy. Exemptions may be there, that is a different thing. But levy is there even if the supply is there by government in case of GST, or even if import of goods is there by government in case of customs. So levy of GST is there when supply is made by government. Levy of customs is there when import of goods is done by government. Levy is very much present. Special exemption notification was an extra point that I have said. So levy is very clearly present. Now what is the difference that you can find in levy of GST and customs? Friends, again I'll be taking your GST n number of times. We will be comparing your GST every now and then. Every chapter will be comparing your GST so that you get more clarity. Now friends, you have to understand that when you talk about your GST levy, there were 6 P's: product, process, place, price, percentage and your person. Whereas in customs, your focus for levy is only on 3 P's, that is product, process and place. When you talk about your price, percentage and person, it is only for assessment and collection. The focus on price, percentage and person is even there in customs, but that is only for your purpose of your assessment and collection. So that difference you have to understand. I think we have discussed that part. So when you talk about your GST, all the 6 P's in your GST, they are required for your levy. As well as collection, but levy is very much there. For your customs, the moment you qualify the first 3 P's, levy is there. That is product, process and place. The last 3 P's, price, percentage and collection, price, percentage and person, is only and only for assessment and collection. So levy stops at first 3 P's. So that you have to understand when you're talking about your GST versus your customs. Friends, that is all about your normal charging section. Section 12, where we have discussed about your levy as well as your assessment and collection, the later part. But focus was only on your levy and few important points we have discussed. About your normal charging section, which is section 12 of your Customs Act 1962.